While the world's financial headlines are obsessed with the aggressive decoupling of China and the sanctions on Russia, a much more subtle and perhaps more dangerous shift is happening in the heart of the global south. For decades, India has been a cornerstone of the Western-aligned world, a strategic partner in the Indo-Pacific and a massive holder of the world's reserve currency. But money, unlike diplomacy, doesn't lie. Behind the scenes of the Reserve Bank of India or the RBI, a silent revolution is underway. Financial data from the last 12 months suggests a staggering movement, an estimated 50 billion unwinding of US Treasury holdings. This isn't a loud geopolitical protest. It's a quiet exit. Today we investigate why one of America's most critical strategic partners is pulling back from the US dollar and how this quiet move signals the end of the unipolar financial era. To understand India's pivot, we have to look back at February 2022. When the US and its allies froze 300 billion of Russian central bank assets, the message was heard loud and clear in New Delhi. India, which prides itself on its strategic autonomy, realized that foreign exchange reserves held in US Treasuries are not truly assets. They are permissions. If a nation's wealth can be turned off with a single stroke of a pen in Washington, that nation is not truly sovereign. The $50 billion exit is India's answer to the weaponization of the dollar. It is a massive, calculated insurance policy. The RBI is signaling that it will no longer allow India's economic destiny to be held hostage by the foreign policy of a distant superpower. But where is that money going? If India is selling US debt, what is it buying? The answer is buried in the vaults of the RBI. In 2024 and 2025, India executed one of the largest physical movements of wealth in modern history. For the first time since the 1990s, India repatriated over 100 metric tons of gold from the United Kingdom back to its own soil. This isn't just an accounting trick. It's a return to hard assets. By swapping digital US debt for physical gold stored in Mumbai and Nagpur, India is building a fortress balance sheet. They are moving away from the IOUs of a debt-ridden West and returning to the only asset that has no counterparty risk: gold. India's exit is also a masterpiece of multi-alignment. Prime Minister Modi has mastered the art of being pro-India rather than pro-West or pro-East. While India participates in the Quad with the US to contain China, it is simultaneously deepening its ties within the BRICS alliance. This $50 billion unwinding provides the liquidity India needs to experiment with de-dollarization. India is now settling oil trades with the UAE in dirhams and rupees. It is building a bridge to a multipolar world where the US dollar is just one of many currencies, not the supreme ruler of trade. Every billion sold from the Treasury portfolio is another brick in the wall of India's financial independence. There is also a brutal tactical necessity behind this sell-off. As the Federal Reserve keeps interest rates high for longer, the US dollar has become a wrecking ball for emerging market currencies. The rupee has faced immense downward pressure, threatening to drive up the cost of India's massive energy imports and ignite inflation. To fight back, the RBI needs a massive war chest of liquid cash to intervene in the currency markets. By selling US Treasuries, India creates the dry powder. It needs to buy back its own currency and stabilize the rupee. It is a survival move. India is sacrificing its holdings of American debt to protect the purchasing power of 1.4 billion Indian citizens. The quiet exit is perhaps more terrifying for the US Treasury than a loud exit by an enemy. When China sells, it can be dismissed as trade war theater. But when a friend like India starts to unwind its holdings, it suggests a structural loss of trust in the long-term stability of the US dollar. India is watching America's 35 trillion debt clock with the same concern as any other investor. They see a superpower that can no longer balance its books and a currency that is increasingly used as a tool of war. India isn't trying to crush the dollar. It is simply preparing for a world where the dollar is no longer enough. As we move into 2026, the $50 billion hole in India's US debt portfolio stands as a monument to the New World Order. India is no longer content to be a passive passenger in the Western financial system. It is now a driver, steering its own course toward gold, local currency trade, and total strategic autonomy. The quiet exit has begun, and as more nations look at India's success, the silence may soon become a deafening roar. The question for the West is no longer, when will our enemies leave? But rather, what happens when our friends decide they can no longer afford to stay?